Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within company filings. And today we have a doozy from Spectrum Brands Holdings Incorporated, a company that is always up to something, and judging by this report, it looks like they might be preparing for a big shakeup, or at least talking about it a lot. So grab your popcorn because we are diving deep into their latest 8K filing. Before we dive in, if you like getting plain English explanations of complex corporate documents like this, make sure to hit that subscribe button and the notification bell. We love to break down these reports so you do not have to. Also, we have a growing community on Discord where we discuss these filings in real time, so check out the link in the description below. Alright, so what we have here is a current report filed on the 13th of November 2025. Essentially, this Form 8K is like a company's breaking news alert to the public, and in this case it is tied to a press release about their financial results for the fourth quarter that ended on the 30th of September 2025. The main point of this filing is to share their latest numbers and what they mean. The company is telling us about their financial performance for the most recent quarter, and this information is not super detailed right here in the 8K itself, but it points us directly to an exhibit which is basically the full press release. We will try to pull out the juiciest bits from that. Now here is where it gets interesting. Companies have to include this forward-looking information section, and it is basically a giant list of things that could happen. Spectrum Brands is saying that future things like their business strategy, their plans for buying or selling parts of the company, their future cash flow for the business, how tariffs might affect them, their operations in the future, their projected costs and managing inventory are all subject to change. They are telling us that these carefully worded statements are not guarantees. They use words like future anticipate and expect to signal this. The important part here is that these statements about the future are based on what they know right now. Things like tariffs that are already in place or announced. They are not including any tariffs that might be announced later or have been delayed, because those could mess up their numbers too. This report paints a pretty sobering picture of the risks the company faces. They are super upfront about how global events can really impact their business. Think about things like economic downturns, wars like the Russia-Ukraine conflict or the Israel-Hamas war that are disrupting trade routes and shipping. These big global issues can hit their customers, their operations, and their suppliers hard. They also talk about how government actions specifically in China could influence their suppliers. Another massive area of concern they point out is their debt. They are worried about how their current levels of borrowing could hurt their business, their finances, and their overall results. This often means they have less flexibility to make big moves, like investing in new projects or even just paying their bills if things go south. They are also highlighting the significant uncertainty around trade policies and tariffs. Any changes here, especially considering potential new ones from the Trump administration in 2025, could really shake things up. They mention their efforts to deal with this by trying to move their supply chains around, but that is a complex and costly process. On top of that, they are bracing for the potential of inflation, recession, and volatile stock markets and labor costs, which are all big headwinds for any company. This is a big one and likely a core reason for this filing. Spectrum Brands is talking about potentially splitting up their businesses. They want to separate their home and personal care unit and create what they call an independent global appliances business. Now, they are extremely cautious about if and when this separation will happen and what the actual outcome will be. This sort of move often means significant strategic shifts, a lot of operational changes, and a big impact on how the company operates and is valued. They are also considering the opposite play, creating a consumer products company by combining their global pet care and home and garden businesses. Again, they are hedging their bets on whether this will actually happen on their timeline and if it will deliver any real benefits. This indicates a period of potential major restructuring and strategic reevaluation for Spectrum Brands. So the 8K itself sets the stage, but it is the earnings press release filed as Exhibit 99-1 that we really need to look at for the financial meat. This is where they detail their actual performance. We are not seeing the specific numbers in this 8K, but a typical earnings release would show us things like revenue earnings, purse hair, and maybe some segment-specific data without the actual numbers from the earnings release right here. We can only infer what the focus might be. Generally, when companies like this file an 8K specifically for earnings, they are trying to highlight positive results or explain away less favorable ones. Given the extensive list of risks they've thrown out, it is highly probable that the earnings call will attempt to paint a picture of resilience amid significant external pressures. The fact that they are so focused on the potential for business separations and creating more streamlined units suggests they might be trying to unlock value or prepare for a sale of certain divisions. This strategic maneuvering is often a response to perceived underperformance in certain areas or intense pressure from investors to simplify the business model. Now, looking at these filings in a broader sense, Spectrum Brands has been through a lot of changes and strategic shifts over the years. They have a diverse portfolio of products in areas like pet care, home gardening, and personal care appliances. The challenge for any company with such a varied range is how to manage each segment effectively and how to present a cohesive story to investors. If Spectrum Brands is indeed looking to carve out distinct business units, it suggests they might believe that these individual businesses could either perform better on their own or be more attractive to potential buyers. This is a classic move when a conglomerate is not getting the full market valuation for its combined parts. The extensive risk factor section we saw earlier is definitely a red flag. It is a way for them to cover themselves saying, look, we warned you about all these things that could go wrong. The mention of tariffs and supply chain efforts is particularly telling. In recent years, disruptions and rising costs have significantly impacted global trade and manufacturing. Companies are constantly having to adapt, and Spectrum Brands is clearly no different. Their concern about future tariffs is a significant risk. Imagine if import costs doubled for some of their key products. That would directly hit their profit margins hard unless they can pass that cost on to consumers, which they would only be able to do if their products remain competitive. Their financial leverage, meaning their debt levels, is another critical point. High debt can make a company less agile. It means more interest payments are due, which eats into profits, and it can limit their ability to borrow more money if needed for opportunities or to weather a storm. This points to a company that might be somewhat constrained financially. The potential business separations are the most intriguing part here. It suggests a strategic pivot likely driven by a desire to simplify their operations and focus on core strengths, or perhaps to maximize shareholder value through divestitures. Investors are often more willing to invest in focused companies rather than complex conglomerates, where it is harder to understand the true value of each part. If they can successfully create these more focused entities, it could unlock significant value, but as they themselves admit, it is a big if and there is no guarantee of success, or even that these plans will materialize at all. In conclusion, Spectrum Brands Holdings Incorporated is signaling a period of significant potential change. They are very aware of the global economic and political risks and the impact of their debt load. The focus on business separations indicates a strategic rethink, possibly to streamline operations or to unlock value for shareholders. While this filing does not give us the specific financial numbers from their earnings release, it strongly points to a company trying to navigate a challenging environment and potentially reshaping itself to do so. We will definitely be keeping an eye on future filings to see if these strategic shifts actually come to fruition and what their financial impact will be. Alright, that's our breakdown of this Spectrum Brands Holdings Incorporated filing. What's your take on these potential business changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate America. Don't forget to check out the Discord link in the description. Thanks for watching, and we will see you next time.